Welcome back to the latest iteration of Luma's market report, where this quarter we're going to cover was a pretty challenging Q2 in 2022 with a lot of challenges across the public equity markets as well as the M&A markets. But remember, you can go to our website, lumapartners.com, to download the full report, which includes all of the data and trends across M&A activity, the public markets, and private financings, where here we'll cover some of the more nuanced underlying trends that we see going on. Let's get started. So look, we all know the last quarter was a very challenging one. All of the macro headwinds that we had in Q1 persisted throughout Q2. We had continued inflation, rising interest rates without a lot of clarity as to where we're going to cap out there, continued war in Ukraine, and more supply chain issues. So it's really no surprise that the public equities have been challenged throughout this sector, but they really were accelerated this quarter versus last. So, where the S&P was down 16% this quarter, both the AdTech and MarTech indices were down over 30%, at least on average for the companies that were hit. And some in the AdTech space, about 1/3 of the AdTech cohort was actually down 50% or more on the quarter. So what happened here? Why are these being impacted so much? Well, first off, given these increasing interest rates and overall concern towards recession and a lot of uncertainty in the market, high growth, speculative, tech-based stocks have been hit the hardest. You see that in crypto and NFTs, you see that in technology, and you see that in AdTech and MarTech. Some of that is just a correction from very high valuations from last year, where you had AdTech at an average of about 20 times revenue. Some of it's also just correcting of the models that go into things like DCF valuations. As interest rates rise, the valuations of future earnings decrease to the present value, and therefore the valuations have to come down. The other aspect that's at play for AdTech and MarTech in specific is that with everything going on, there's a lot of concern about a pending recession. And when recessions occur, people tend to view advertising and marketing expenses as the first to go, as they tend to be discretionary. And while there are certainly some nuances to digital advertising and how it will be impacted here, which I'll touch on in a bit, overall what this does is it creates a lot of uncertainty in the market, which only puts further pressure on the public equities. And the other area that uncertainty really hits on is M&A activity. We've talked about this before. Uncertainty is enemy number one to M&A markets. Any time where there's not clear conviction on where the future is going, it is very hard to get M&A deals done. And in particular, when you have uncertainty as to where valuations are going to be. And that's incredibly challenging, especially in a market like this where you have a pretty steep decline in public valuations, and therefore it starts to challenge what buyers expect and what sellers expect. So buyers really quickly reset down to where the public markets have gone and expect to do those deals down here, whereas sellers are much slower to that. And so when you have a quick decline, you've got this big gap between, and it's not until these can start to come together in season that you can get M&A transactions, at least numerous ones done. And so, you could get them done at a low market or at a high market, but anytime there's a gap is where there's so much challenge. And that's exactly what's been going on in this last quarter, which is why you've seen such a big dry up in M&A activity, and especially scaled M&A activity. There were only, 2 AdTech deals done, and one was frankly a consolidation of a few assets to be over 100 million, and a handful in MarTech. Digital content's probably the lone area that's actually had a lot of strength, and it's partially driven by a bunch of deals that were smaller deals around content and gaming, and a few high flyers like the Elon Musk Twitter deal that is officially signed, though we will see if it actually gets closed. Forward, you'll be shocked to hear that Luma is quite bullish on where things are going to go in this sector. But ultimately, what we see is that the fundamentals of this ecosystem are still holding very strong. First, as I mentioned on the ad spend side of things, there's the notion of what's going to happen in a recession. Well, there's a couple of things at play. First is that tends to be in a recession, people move more towards performance, so more towards advertising or marketing where they can actually see an outcome and measure the ROI. And in that side of things is where digital tends to be very strong and why it's garnered so much more scale over the last number of years. Now, there's not a lot of proof points to this, as the last recession in 2008, the digital ad ecosystem looked nothing like it is today. But there is hope that there's potential for still growth in that channel. Even if the overall ad mix comes down, it may shift more towards those channels. Additionally, you just have continued usage of consumers using things like CTV and gaming, which is why you see more and more M&A and investment activity into those sectors, and why you see more and more companies coming into the advertising market for those channels. Take Netflix, which has been the biggest proponent of no ads, is now finally coming out with advertising supported channels because they need to make up with their subscription growth dwindling and take advantage of the large audience that they have. And so things like that, or the coming retail media, still make us very bullish on the future aspects of this sector, which are going to require a ton more technology and data plays to make these all work. And so for those reasons, we still remain very excited about the future here and expect M&A activity and public equity activity to rise with those long-term trends. So that's it for us. As always, remember that you can go to our website, lumapartners.com, or click the link in the description to download the full report and get access to all the data. And remember to subscribe to stay up to date on all of our latest content. I'm Conor McKenna, signing off.